An anxiety-producing question. Do I have enough saved for retirement? Nearly 40% of households face a lower standard of living in retirement.
Hey guys, I'm Dominique and welcome to the Domino Effect, where we talk about everything business, entrepreneurship, insurance, and financial literacy. And today we're diving into a powerful video that was sent to me talking about retirement in America. What's really going on with retirement and what you need to be doing right now to avoid any type of financial disasters, because a lot of people are not thinking about the long-term strategies. I know for myself, the biggest mistake that I ever made was starting to think about retirement in my 30s. Okay, I did not start thinking about retirement until my late 30s. So a lot of people find themselves in this position. Actually, a lot of people find themselves further down the line with no retirement, thinking that their savings is going to hold them over. So today, let's get really, really real, because that's what this channel is all about. It's about providing you with long-term strategies. So watch this video till the end and grab your free guide, because when you hit that like button and when you hit that subscribe button, I can continue to make more free courses and trainings just like this one. So watch this video all the way till the end so you can grab your free guide, because it's not just about saving, it's about strategy. Now let's get into it. All right, guys, this video came to me. This video was sent to me, and it's about retirement in America. So let's get into it.
This is certainly not part of Larry Gessick's retirement plan. The 77-year-old electrician by trade leaves at 5:30 a.m. and heads for his part-time job unloading trailers at a local supermarket in St. Petersburg, Florida, for $14.75 an hour. His wife, Joyce, 66, prepares for her workday, making $14 an hour as a full-time legal administrator.
It's not really a retirement.
What is it?
It's working every day.
Let's pause right here. What they're saying is a reality check for a lot of people. Americans right now are struggling to retire. You might be familiar with it. Maybe it's your situation, maybe it's your mother, maybe it's your grandfather, your uncle, your brother, somebody in your circle who is having a difficulty. They thought they'd be retired, but maybe they're having to take on another job. And guys, it's not because you didn't work hard. It's not because they didn't work hard. It's just because the tools that they were given were not set up for them.
The Gessicks came out of retirement not because they wanted to, but because they had to, and are among the 11 million Americans, 1 in 5 over 65, who are still working.
It's hard, 77, still busting my butt.
Sometimes the tools that they were told to trust, like traditional 401ks or traditional IRAs, were not necessarily set up properly.
Well, I call it the work, retire, repeat syndrome.
Labor economist Teresa Ghilarducci says work is the new retirement.
More than half of the people who are retired right now do not have enough money to be retired.
Now, this video is not at all dogging 401ks or IRAs. Remember, this is all about strategy so you can figure out what is going to work best for you. But we have to face the hard facts. Traditional tools like 401ks and IRAs just are not stretching as far as most Americans actually thought that it would.
Who's to blame for all of this? I blame policymakers who experimented with our retirement system 40 years ago, and they are not saying the experiment failed.
That experiment is what we know today as the 401k, named after part of a 1978 law that offered companies an alternative to the traditional pension plan.
The thought was that Americans just need a little bit of financial literacy and they can just save on their own.
But in fact, many of today's older workers were never taught enough about saving and investing for retirement.
I grew up on a farm. Nobody there instructed any of us to put money aside and make your own way later on down the road.
And then you got to think about this. When the market dips, what usually ends up happening? Well, people panic, right? They go and they start pulling everything out. So what happens then? It's going to lose value, and then they find themselves stuck. And sometimes the advice that we get is not necessarily right for our situation. Maybe you're getting advice that's telling you not to touch it, or maybe you're getting advice that's telling you to take everything out and put it somewhere else. You need to figure out what is going to be best for you. And a lot of us, women, veterans, business owners, kind of find themselves in sort of a panicky situation until a crisis falls into their lap. Even then, when people are being told, oh, just write it out, you know, as you're watching your 401k drop, as you're watching your investment drop, and you're hearing, just leave it there. A lot of people are feeling like, what the hell are you talking about? I just don't have time to write this out. So here's the deal. The goal, like I said, of today's video is not to tell you what to do. It's about to get you to think about what is going to affect you personally. You don't just have to follow the herd. What you need to do is pause and book a time with an advisor to figure out what is going to be best for you and your family. Because there's so many different products out there. There's so many different ways that you can do this. You can secure your retirement through a 401k, through an IRA, through an IUL, through an annuity, or you could diversify against all of those. The goal of the video today is to get you to think right now, get you to start taking action, because I can't tell you how many people I've talked to in their 60s, in their 70s, in their 80s who are looking for insurance, but they've developed cancer. They got some sort of sickness. They just had a heart attack. So all of these issues are arising. Don't let that be you guys. If you have a 401k and your employer is matching your 401k, then why not keep your 401k, right? The employer is matching it. But a 401k is a tax deferred plan. So why not take that extra, once you get over that matching component, that matching percentage, that extra that you're putting into your savings or that you're putting somewhere else and you're just stockpiling up, putting it into something that's actually going to work for you and be a more of an advantage, because you have to do something that builds your future now. You do not want to wait for the government handout. You don't want to wait for more regulations. You don't need to wait for anybody else to step in and take control of your life. You can do this, and you have to start now, because time goes on and time goes by really, really fast. I don't know if you've noticed, but time goes by super fast. Not to mention, it is our most valuable resource. So make sure you're using it and prioritizing. So thinking about this strategically would be, we're talking about with your 401k, it's tax deferred, it's tied to the market, which means it's tied to the market in a way that it can actually lose value. So as the market goes up, your stock rises. As the market falls, your stock falls. That means it can lose value. And it has limited flexibility when you need to pull money out. So there are penalties associated with it if you need to pull funds out before a certain age. What if instead you took that money, that extra savings, and you strategically put it into a vehicle that was actually going to give you a bigger return? If you moved it into a plan that still rides the market, but it's protected from market loss, which means when the market drops, your principal never drops below zero. And not to mention, it grows tax-free and produces tax-free income you can use for retirement and gives you living benefits. That's where strategies like indexed universal life, IULs, or annuities come into play. And I'm talking about the tools that savvy investors are using, companies are using, high net worth individuals are using, even banks protect their money through insurance.
Like many working Americans, the Gessics were more doers than savers. They drained their 401ks.
I think to us it felt more like a savings account than to focus on, I need to have this piled up to actually live on.
They have a mortgage, a car loan, and are paying down about $12,000 in other debt. But even with Social Security, some old pension funds, and their paychecks, money is tight.
All these expenses and the debt pay down leaves you with very little money every month, right?
Yes.
How much is that?
$50.
Now this right here hits home, because so many of us are out there working hard, women, veterans, you know, whoever, we're out there and we're doing everything, and you feel like you're doing everything right? Even those that have had maybe even a difficult life, and you worked hard to change your life and to turn everything around, and you're working hard and you're grinding, and it's like, man, when is shit gonna actually, when are you actually gonna reap the benefits of that hard work? Even feeling like, despite all of the money that you're saving, that you're still even falling behind. That's because we're in a financial system. We're living in a financial system that was built for everyone, but unfortunately, most people are misinformed and don't have the right information in order to play this game, right? Even though the financial system is a game that was built for everyone, not everyone necessarily knows how to play. And that's the goal of this channel. So leave a comment if you are experiencing this, if you are thinking about your retirement, if you have something set away and you're worried that maybe it might not be enough, because remember, it's tax deferred. So if you think taxes are going to get lower in the future, then okay. But if you think they're going to get higher, then you definitely should be looking at other ways to strategically handle your future when you retire. Because nobody was traditionally telling, or there was a lot of misinformation out there that was previously. Now you have resources like this channel to help you, so make sure that you leave a comment, you're liking this channel, and you're sharing it with other people in your network, because retirement in the insurance industry alone, there are billions of dollars that are unclaimed. So you guys need to be taking advantage of this, because this is something that is often overlooked. So that is the strategy. Instead of leaving everything into one plan, everything into your tax deferred 401k, what you can do is put it into something that's going to give you tax-free income in your retirement, access to your money early so there are no penalties if you need to take it out, a death benefit that passes on to your family tax-free, and the best part is that it participates in the market without actually losing any of your money. So basically, when the money drops, your money doesn't. But when it rises, your money rises. Guys, this stuff matters. And I want you to drop a comment if you've ever heard of an IUL, if you've ever heard of an annuity, if you have a plan for your retirement, if you have something in savings. Actually, just drop a comment if you've been thinking about it, or if you haven't thought about it at all. Because listen, this matters. This stuff matters. And it's amazing how many people are not thinking about this. I wish somebody had taught me about this when I was younger. If you're a mom, if you're a business owner, if you're a family, if you have family and you're juggling a bunch of different things, if you're a trucker, if you work in manufacturing, in construction, life happens. If you drive to work, if you walk across the street, anything can happen, you guys. Anything. But not to mention, that's in death, right? But let's say you live longer. People are living longer, guys, okay? I think that the age for women now is like 85. So you're living longer, which means you're outliving traditional term policies, right? So you need to be thinking towards your future. Every so often you should be meeting and reviewing your plan and making sure that you're set up in a way that is going to allow you to actually enjoy your life, a living benefit. When we think about life insurance, it's so taboo because we're thinking about death, right? But actually, it can be used while you're alive, guys, okay? When I picture my retirement, I'm thinking about I'm relaxed, on the beach, you know what I mean? Like, what does your retirement look like? Drop a comment and tell me what retirement looks like for you. And are you set up to get there? Okay, do you know how much you need to live on monthly for your retirement? That's what I need you to start thinking about today, because you cannot afford to wait, and you cannot rely on the government or anybody else to step in and do this for you. Financial planning, guys, is not just for the wealthy. Planning your retirement is not just for ultra high net worth individuals. I'm talking to my women, I'm talking to my veterans, I'm talking to my everyday people out here. We need to be thinking about this, okay? This is for people that actually want options, for people that want to enjoy that part of their life. This is how you build a roadmap to get there. So if you're watching this and you're thinking, man, I wish somebody would have told me that when I was younger, well, that's exactly why you're watching this channel. So that's it for today, guys. And now I need you to do two things. First thing I need you to do is go ahead and book a call with one of our advisors so you can figure out where you currently stand. You can get a current blueprint. You can see what your options are, and you don't have to do anything. You can just see where you're at and then go from there. But the point is, you're starting to think about it today. And the second thing I need you to do is go ahead and download your free guide. And that's it for today, guys. Thank you so much for watching. Hit that like button, hit that subscribe button so I can continue to make more free courses and trainings just like this one. See you next time.